Yes. So growth comes from debt. Growth comes from debt, or growth could also come from cash flow. But if growth comes from cash flow, it becomes really challenging sometime because you have limited cash flow and you want to grow faster. So if you see the example of a country as well, like America started borrowing in 1945 to 55. And then if you see the 1960 onwards for 30 years, United States was having exponential growth because having those debts. So growth comes with debt, but debt is not bad because debt has ability to pay for that growth, and growth has the ability to pay for that debt. Because if growth is proper, then you have right stream of revenue and you can pay off that debt very quickly. So either you have an option to pay off your stream of expenses or growth or all the levers you want to spend on which drives growth through debt, or you can do it through cash flow. Well, cash flow is going to be limited. If you see, in a way, people, companies or startups raising from the venture capital industry is also a sort of obligation. Don't you think it's an obligation? It's an obligation because there's a mechanism they have to decide to pay it off. So it looks like that you are raising from equity, but actually it's sort of a debt or it's an obligation. So any obligation is actually a debt. So if you are raising through equity, even you are raising through equity, but you have an obligation to pay it back because the traditional venture capital structure is also a general partner is taking the decision about investing into those companies. But at the end, after 7 years, 8 years, 10 years, 12 years, you have to pay it back to the limited partners who has invested the money into those VC firms. So it's a sort of, so whenever the GPs of any venture capital funds are deploying that fund to any company, it's a sort of obligation. And founders should understand the obligation of returning that money back. So when they are thinking about returning that money back and it's a sort of obligation, it's a sort of debt. It's a sort of debt. But like, no, you also have to think about that how you can pay off this particular part by fixing the unit economics. So debt is important, but debt not on the cost of not having a clear unit economics. So understand your unit economics, understand that debt is not bad with clear unit economics and clear goal and clear distribution.